Well, we're going to talk financials in a minute, but we got some stuff to clear up here. Now, there were multiple days, I think, in the last 10, for example, where you put out notes suggesting that the NASDAQ and the mega caps were especially vulnerable and that they were big risk of going lower. Here we are. We've done the mega cap earnings that prove not to be the case. I'm curious as to how I should take that if I'm an investor today.
Yeah, well, I think, one of the indices we were talking about was the Goldman VIP Index, which is the 50 names that they deem to be the most important to hedge fund clients. And that recently got, one of the most extreme overbought readings we've seen in the last decade. And previously, when that happens, sometimes it's imminent, but sometimes it can take a couple weeks. But in almost every instance, with the exception of, mid-December 2019, which led to about a 3-week rally before some turbulence, with every instance, within the next few weeks, it gave back all of those gains and then some and saw a decent correction. So, I think today's action, some idiosyncratic, certainly there's some very positive earnings news in some of those most important names. But I think ultimately, when you look across the landscape, you're starting to see, even within the Mag 7, you're starting to see some signs of breaking that correlation, right? We know that relative strength for Tesla and Apple peaked last summer. For Alphabet, that peaked last fall. And so 3 of the Mag 7 names are actually acting or underperforming the S&P. And so while it seems, that the 4 remaining names are, almost invincible, I think as we get into the later part of February, you're going to see some turbulence in some of those VIP names.
But I mean, the ones you mentioned, though, have underperformed for fundamental reasons and nothing else. If anything, these stocks are proving to the market that they deserve to be rated where they are and have the price action that they've had, don't they?
Yeah, look, I mean, those 4 remaining certainly have the momentum and the relative strength. So, Meta, Nvidia, Microsoft, and Amazon certainly, those are the clear leaders right now. And, even a pullback from this point certainly would not get them even back to where they were a few weeks ago. So I think the issue here really is, what else can we see rotation under the surface to kind of make up for the falling of those other 3. You could argue there's a few other names out there that are trying to do that, and maybe it's Broadcom, something like that. But I think when you look at the index holistically and some of the exhaustion signals we're seeing, we just think as you get into the middle part of February, from that perspective, you have to be a little careful.
Why are we picking on the financials today? What have you seen there that makes you a little nervous there?
Well, look, the financial, there's an old saying, from false moves come fast moves. And if you go back, just 4 or 5 days ago, it looked like the regional banks were actually poised to break out to the upside. Obviously, that didn't happen. You had, a name that maybe triggered it. And then here you have regional banks down 10, 11% quite quickly. And typically with the financials, like a lot of sectors, when you see weakness in the smaller cap names, which regional banks are, that tends to precede weakness in the larger caps. And we saw that almost exactly a year ago. So if you go back to a year ago, the regional banks started to show weakness in February. The large cap financials continued to show some relative strength, actually didn't peak out until late February. And then obviously everything fell together. So I don't think it's going to be as extreme by any means, but I just think when you have the large cap financials into overhead supply from their 2021 peak. They were up, 9 days in a row coming into this week. I think, just there's some risk for the downside for large cap financials to kind of follow the regionals.